Hey everybody, and welcome back. I'm one of the coaches at Unga Academy, and today we're going to be talking about the selection of inputs, and in particular, how to select the set of parameters of a system to go live. I want to do this by taking inspiration from the real experience of a member of our group, a one-year target, that has been using this methodology for some time with great success and has achieved some great results. As mentioned before, we're going to be talking about the selection of the inputs of a system. And I want to do it by starting from the experience of Giuseppe, one of our traders and one of the members of the one-year target group who has been successfully using this methodology for quite some time. But before we start, as always, I invite you to subscribe to our channel, activate that notification bell, and leave us a like as well. Thank you so much. Hi, we are the Unga Academy, and we teach traders how to make money in the markets. Our founder, Andrea Unga, had been struggling with trading for years until he developed his automated trading method, which he used to become the only 4-time world trading champion. Subscribe to our channel for free tips and tricks. Okay, so what do we see on these charts? Well, we see the VXX and ETN derived from volatility, which means that it derives its price from the trend of the VIX. On these different charts, we can see the same system. It's a system that has already been used for a long time, so it has been validated, and so we can be fairly sure about its robustness. However, before we go live with the system, we need to decide what set of inputs to use in live trading. I decided to go back in time to 2019. So we have 2 years of out of sample, which we don't see on these charts above, to decide which set of parameters to use, as if we wanted to go live. The system produces more than satisfactory equity lines. Every set of inputs maximizes a specific result. We have an input set that maximizes, for example, the return on the drawdown. Let's try and see what results we get. Yeah, definitely a very good equity line. We could choose an input set that maximizes the net profit, for example. Maybe it isn't the best objective to use, but let's have a look. Also in this case, I imagine to see a very interesting equity line. Or still within the same metric, we may find a set of parameters that maybe isn't the first, but gives me a much higher net profit. Now you see this second set of parameters has a lower return on drawdown, but produces results that are certainly more interesting from an economic viewpoint. So it could be worth the while to use this set of parameters. Let's look at the equity line. So this is to say that it's not so easy to select which inputs to use in live trading. And often we have to make a choice that inevitably has a component of probability. So let me explain myself better. Are we so sure that the set of parameters that we've just chosen and that has given excellent results so far is the set of parameters that will give us the best and most stable results in the future? Let's say in the next 2 years. How many probabilities are there that we'll actually be able to identify the best set of parameters to use in the future, given all these input permutations? This is exactly what I mean when I talk about probability. Namely, what has been the best set of parameters up till now, which will most likely not be the best set of parameters for the future, because randomness does play an important role in this case. So given a stable set of parameters to work with, finding the best combination for the future, well, it's pure luck. So how can we minimize the impact of probability on this type of procedure? When it's possible, and here I refer to what Giuseppe actually does during the live trading, a possible solution can be to use more than one set of parameters by investing the capital on different versions of the same system, in order not to bet on a single horse, and that we hope will be the winner. So Giuseppe uses this system in real time, and he uses it not only on one time frame, but on different time frames, 15, 30, 60, 90 minutes. And for each time frame, he uses 4 different sets of inputs, still picking the inputs from an area of stability and selecting sets of parameters that obviously must be different from each other. And this is to minimize the impact of probability on the future trend of the system. So I created a portfolio where the same system works in 2 different versions on 60 minutes and 2 other different versions on 30 minutes. So they use completely different sets of parameters. And this is to see the out-of-sample performance that this portfolio could make. So let's run the backtest. The capital per single system is $1 million, only because due to the various reverse splits that have been done on this instrument, so it wouldn't otherwise be possible to backtest the system in the past. So let's leave the economic values aside for the moment and focus on the trend of the equity line. Obviously, you can trade in real time with a few $1,000s, therefore with a capital that's truly within everyone's reach. Returning instead to our equity line, you'll see that in out of sample, the portfolio of systems has continued to perform quite well. There's a certain regularity in the out of sample performance, even with a higher volatility. You can see that the equity line is probably more irregular than in the past, but this is normal because we're comparing an out of sample period to an in sample period. Having said that, it is interesting to see how the individual versions of our system performed. The first version, in out of sample, has done certainly very well. You see that the equity line continues to grow with regularity. So we would have been lucky to pick that version. Now let's go and take a look at the second version. Well, here you see that the second version isn't as good. It's definitely positive, but not as good as the first one. Let's go take a look at the third version. Okay, the third version isn't bad. It's continued to perform well, even though in the last period we can see that it had, it's been sideways. Finally, here's the fourth version of the system, which is probably the worst of all. But why? Well, because in the last period, namely in the last year or so, it hasn't produced any profit. Okay, let's try and take a closer look at it. Here, this is the out-of-sample trend. But perhaps by next year, it could go back up and give a greater economic result than the previous versions. So let's take a look at the overall portfolio. Let's zoom in on the out-of-sample portion. Here it is. And you can see that overall, the system's portfolio has done quite well in out-of-sample. It wasn't the best solution, sure, but it would have been pure luck to be able to select the set of parameters that gave the best out-of-sample results. So this allows us to minimize the impact of probability in the selection of the parameters to trade our system live. So to put it in a nutshell, given a reliable, robust system with a stable set of parameters over time, the best set of parameters to use in live trading is a mix of different sets of parameters, because this allows us to minimize the impact of probability in the selection of inputs. So in my opinion, it's very smart to do something like this. Obviously, we're allowed to do it, of course. For example, I'm referring to the world of cryptocurrencies, where there's a lot of granularity, to the world of forex, to stocks, as in this case. Applying this to futures is honestly a bit more complicated. But we know that today there are micro contracts, and therefore the same version, for example, of a system on the mini S&P could be traded in 3 different versions using micro contracts. So I realize that there are pros and cons, and this methodology certainly requires more work in terms of monitoring the progress of the system. And yes, it consumes more resources in the VPS, but it's the only way to minimize the impact of probability in the selection of the parameters to use in live trading. Well, everyone, I really hope that you found this topic interesting. And I'm really curious to know if any of you are already using this approach in your live trading. So let us know by writing in the comments below, and we will answer everyone. And if you're interested in our approach to trading and want to start investing in the markets in a systematic way, then I recommend you click on the link below. It'll take you to a page where you'll find very useful resources, including a presentation by Andrea Unger, our founder and the only 4-time world trading champion with real money who uses the Unger method, which is a systematic method to invest in the markets. And also so much more. Finally, before saying goodbye, I invite you to leave us a like if you like the video, to subscribe to our channel if you haven't already done so, and click on the notification bell to stay updated on the release of all our new videos coming up. And with that, we'll see you in our up and coming videos. Until then, bye-bye.